Hello and welcome back to Explain the Charts. Today is February 28th, 2025, and we're diving deep into the SPY, the S&P 500 ETF, looking at both the recent news and the charts to figure out where this market might be headed. We'll analyze what's been moving the market and try to make some predictions on what price levels to look for. First, let's quickly go over some of the key news items impacting the S&P 500. Recent reports indicate that the stock market is set to open higher today after erasing all gains made in 2025. However, Trump's tariff threats are looming over the market, adding a layer of uncertainty. Nvidia's earnings beat has provided some positive momentum, but concerns remain about potential pricing pressure and competition. We're also watching consumer confidence, which has seen a significant decline recently. And Tesla stock tumbled 8% after a report of a 45% drop in European sales. Now, let's switch over to the daily chart and see what the technicals are telling us. Looking at the daily chart of SPY, we can see a lot of volatility over the past few months. From around October 2023 through early April 2024, the S&P 500 saw a pretty consistent climb, reaching new highs. However, since then it's been a bit more choppy with a series of pullbacks and rallies. Most recently, leading to today, it looks like it's mostly been consolidating. Looking closer, we can identify a potential support level around the 585 area. This level has been tested multiple times in December 2024 and February 2025, and it seems to be holding at least for now. If the SPY breaks below this level, we could see further downside. On the upside, there appears to be resistance around the 610 area. It tried to break this resistance 3 times, but then ultimately fell. Now, let's take a look at the hourly chart for a shorter-term perspective. On the hourly chart, you'll see that most recently we've been in a downtrend. It's hard to say if we've established a floor yet or not on the hourly chart, or if we've reached the bottom. Perhaps zooming in on some smaller timescales may help. Looking at the 15-minute chart, the most recent candles show a sharp downward movement yesterday, February 27th, followed by some consolidation. This could be an indication that the selling pressure is easing, but it's still too early to tell for sure. The 15-minute chart is mostly showing a sharp downward trend though, and it would be surprising to see this reverse quickly. So, what's the outlook for SPY? In the short term, the market could continue to be volatile, influenced by the upcoming inflation report and Trump's tariff threats. If the market breaks below 585, I'd say there's a 70% chance we could see a test of lower support levels, maybe around 570. The 570 level is fairly important due to the fact we had a steep incline towards 610 starting there, so if it falls down that far, it would be a signal that a large change has occurred. On the other hand, if the SPY can break above 600, we might see some bullish momentum build, perhaps 60% chance that happens with the help of positive economic data. Longer term, most surveys indicate that the S&P 500 could end 2025 up around 9% from current levels, as well as strong inflation-adjusted returns. However, this forecast really hinges on several factors, including interest rate cuts later in the year. Keep an eye on the news regarding tariffs and trade tensions. Any escalation could trigger a significant market correction. Also keep an eye on the Fed. It'll likely be an indication of how safe the economy is if they lower interest rates. In summary, key price levels to watch are support around 585 and resistance around 600 and 610. If we break below 585, things look pretty bearish, but above 600 things look more bullish. Keep an eye on the news and economic data and adjust your trading strategy accordingly. Remember to manage your risk and never invest more than you can afford to lose. Thanks for watching Explain the Charts and happy trading!